What is going on, guys? This is the second video of our basic candlestick patterns. In the previous video, the last video, I teach you what are the basic types of candlestick. And then there are so many types of candlestick pattern, but I picked very few of them which are very relevant, which you can see them in the market, which are giving you the high probability trade entries. So, and also today we are going to dive into those specific candlestick patterns that we use in the A1 FX Pro community. This is A1 FX Pro candlestick pattern. We choose from among the base candlestick pattern that you could ever want to know about. So, but before we introduce you to those type of candlestick pattern, we use logic. It's not just picking random candlestick. When you trading is based on logic. Logic of what? Logic of a specific pattern that is repeating in the market. Some patterns are repeated in the market, but still they are not high probability. But we are looking, we go in and research using thousands of hours to study the market, attending so many mentorship to come up with these specific candlestick patterns that give you an edge in the market. You can't afford to miss this. Please stay tuned to the end of this video. At least if you can stay to the end of this video, I promise you that you can get to your next level in trading. Boom, let's get into the video now. A1 FX Pro candlestick pattern. So in A1 FX Pro community, we don't trade candlestick pattern as commonly taught in most Forex mentorship. The candlestick pattern explained above, that is explained in the previous video, are not traded in isolation, but rather we combine them to create a more favorable and high probability condition. This gives us an edge in the market. The consistency is trustworthy. It's something that you can trust, something that you can have faith in, something that you can invest your money in. Because we look beyond just a candlestick and analyze each candle in relation to previous higher time frame candle. See, we are looking at what is the previous highest time frame candle, the higher time frame. Let's say hourly time frame. After a daily candle close, this is our higher time frame candle. Then we go into the H4 time frame. So when the weekly candle close, so we are looking at the pattern in the daily time frame. If the monthly candle close, we are looking at those patterns in what? In the weekly time frame, just like a higher time frame, just like a time frame alignment. So this is what we're trying to see. We are looking at the previous what? Higher time frame candle. With this question in mind, does this pattern support? We always go with this question in mind. Does this pattern support the previous higher time frame candle intention, or is negating it, or is opposing it? If the pattern forms, the patterns will give you two information. When it is supporting the previous higher time frame candle, is telling us what the market is going to ride. Remember, I said yesterday, I teach you about the consolidation candle, I teach you about the rejection candle, I teach you about the expansion candle, and then I teach you about the Marabuzu candle. These four types of candles, they are very, very important. If you do not know something about this, please go back and check the last video before this one. This is where we get in and teach you how the smart money concept, how the smart money, the interbank price delivery use this specific candles. These are the three types. With these candles, we take them from what we call the four phases of market. In the smart money community, when you are trading the smart money concept, we only have four phases of the market. One is what? The consolidation. Two is what? The expansion. Three is the rejection. That's the reversal or the retracement. So you can see there are four phases: consolidation, expansion, retracement, and reversal. So the rejection candle is what we define as the reversal. Then we have also the consolidation, which is the Doji, the inside bar, which is the face candle. Then we have the expansion, which is an expansion candle. They go a long way with what? The Marabuzu candle. So these are just exactly what we are talking about here. So when these candles, remember when we have the rejection candle now, assuming we have a rejection candle, then those rejecting saying we want to buy, then when the pattern form, is this supporting the rejection that we are going to buy, or is negating it? That is saying something different. or whether we have an expansion candle saying we are going in a higher direction. Then this particular patterns form. Is this pattern really supporting the market to go higher or is negating it? That is exactly what I'm trying to say here. Though we maintain the simple and most popular analogy of candlestick. Remember the candlestick logic. Wick and close back inside previous candle range means when we have a candle when we wick above previous candle and close back inside the range, or we wick below it and close back into the range, this is significantly telling us there is market is going to either retrace or is going to reverse. That's what we say, sir. Means reversal to either 50%. Remember, when we say 50%, we're meaning what? Retracement. When we say retracement is what? 50% of the previous candle body, or it's high or low. That is saying that we either retracing to the 50% of the range. That's the retracement. You know, if you know how about what we use the Fibonacci candle, you know, that's exactly what we are saying. You know, when you understand smart money, you know how to read candles. That you can know how the behavior of the market goes. The market is every bulk activities in the market. They are inside a single candle. When you understand a particular candle, you can beat the market, guys. So expand and close beyond the previous candle opening price. So when we are closing beyond, either above or below it, if it is a down candle, we are closing below it. It is invariably telling us the market is indicated the strength in that direction is what is indicating there is strength in that direction. We easy hanging fruit. So you can see when we are going in that direction, it's telling us the momentum is still intact. Like we say, an expansion candle means what? An expansion candle means continuation. Then we have open and close inside the previous candle range, indicating consolidation, pause or weakness. So you can see what I just explained to you previously. I said that when you have the doji, when you have the small body candle that is closing inside the range of the previous candle, it's telling you what there is consolidation. Remember the phases of the market I say also. You can see even here we already have them there. When we have the rejection candle, which is the wick and close back, is what? Is indicating either reversal or retracement. When we have expansion, it's indicating what price is trying to expand is continuation. We are continuing to expand to enter in other phases of the expansion phase of the market. Then we have the close inside. That is consolidation. We are closing, is we call it, they call it the inside bar, is closing inside the previous candle body. Or it's just the previous candle has just engulfed it. Sometimes they say the pregnant woman because it looked like a mother and a baby. So this is variably what we are saying there. So, my guys, listen, guys. Wick and close back inside what previous candle range. Remember, this is just a pictorial presentation of what I just explained before. You see, we wick and close back inside the range. Remember, look at what I just write there. I say previous candle high or previous day high. We are hitting a key level. We are in a rejection zone. We call it a demand zone, supply zone, fair value gap, order blocks, all these things, or short time highs, all these things are just rejection zone. We call it a reference point. When we are, price has already closed, previous candle closed in a rejection zone, and then we wick above it and close back inside the range. That invariably tells us that what reversal is coming. Remember, I showed you this type of candlestick before. On the previous video, I showed that this is this is a rejection candle. This is saying what there is reversal coming into the market. Now we also have what we have. That will such explain the second part is the bullish part. The first one is the bearish rejection candle. So then we have expand and close beyond previous candle opening price. You see, we are closing below previous candle. That is telling us the momentum is intact. The momentum is coming into the market. You don't want to look for reversal in this kind of situation. The market is trending. The market is going up. We are expanding. We are expanding. We are expanding. Remember the previous candle we said we use the word in conjunction. Assuming we have not reached an opposing draw. Remember, I talked about something yesterday. The timing is the market maker buy model, the market maker sell model. When we are still in the market maker buy model, we are still buying. We have not reached the terminus of this model. It's invariably telling us that we are not reached the higher time frame where we will not reach the interbank delivery. They have not reached to their at the end of the distribution phase. The market is still distributing. So this is telling us that what the market, when we are closing above previous candle high, is telling us that what the market is going up in that direction. So we have open and closed inside previous candle range. Oh my guys, you can see that we are closing what back inside the what previous candle range. Look at it, guys. Look at it, guys. You just hit a key level, and then you have what an inside back. This is telling you two things there, guys. Remember, I teach you about the inside. I taught you about the doji. This is the first candlestick pattern that I teach you. This is the doji. This is the weakness in the market. This is a kind of market is posting. Remember, I said when we see this market is either consolidating. So you can see that when we hit a rejection, and that's where rejecting from a resistance level. You know, sellers enter normally at the resistance level, while buyers enter mostly at the support level, either demand and supply. This is how, no matter the terminology you're going to give it, what I know is a rejection zone where we're expecting rejection. And then the previous candle closed there, and then followed by an inside back. So an inside back is telling us information. What is guys telling us? Is telling us something is about to happen in the market. Remember, on the first instance, I said that we will be above and close back. But in this case, we are closing inside. So it's telling us something we are trying to, the market makers are accumulating orders. So how do you participate in this kind of situation? What we want to see is we want to see the next candle that is going to open here, guys. We want to see it opens, took out the high of this candle, and then close back. So remember, when we want to see reversal, we want to see, we are taking out liquidity from the previous candles and then breaking back into the range. So this is telling you that immediately when you see this, it's telling you the market is about to what? Reverse. We are in a key level, we consolidate, accumulate orders, and then we reverse and we come in. Remember the faces of the market. Always remember the faces of the market. Market will always start with consolidation. When we consolidate, we manipulate, and then we expand. Surely you can see expansion down to this level. Now also you can see that the other faces of the market, the other part, the other one is, you can see here, market is expanding. It has not reached the key level now. So the market is still trending, it's still going up. Then we have this thing is forming. That's why I say I call it post. The market is what is reaccumulating. This is the second stage of redistribution. The market is accumulating in the market maker buy model. So you can see that we are accumulating order. How do we want to trade it? Because this is continuation. We want to see the market open. The next candle will open and go up below these levels, take out the liquidity, and then expand. This is what we call expansion, consolidation, manipulation, and then expansion. So you can see that this is happening in the face of when there is retracement is coming into the market. This one is one we we're expecting what reversal. Always the four faces of the market is always showing it. And this is the third part here. You can see that market just reject from a key level, and then we have an expansion. This is telling us that this order that the market makers has accumulate order here is not enough for them to rally. Then they need more sellers. They want to induce more sellers to come into the market. When we collect the liquidity here, guys, it's going to expand like no any other business. This is the key to identifying markets logic. That is how you can trade what? The logics in candlesticks. This is one of the logic. This is not the candlestick pattern. I'm just trying to give you the picture of what we do. So how do you incorporate these things together? Remember, the first one, you want to see what? Rejection candle forming above it. We want to reject above and close back. Reject previous candle high and close back into the range as a rejection candle. It's going to drop like no any other business. In this case, we want to wick below and continue. Also here, we want to wick below here and then continue going up. This is just what you're looking for, guys. This is just what you're looking for, guys. This is what you'll be looking for, guys, to understand the logic of how to apply these candlesticks. Let's go. Goes on, guys. Oh, this is the magic, guys. So now we are coming into, remember, you have been taught about what? The candlestick pattern, the morning star. Guys, this is the key. This is just the morning star that you've been taught about. I want you to delete those information from your mind. This is the real morning star pattern that you are looking for, guys. This is the real morning star pattern that you are looking for, guys. What do you want to see? You want to see expansion. This is an expansion in a bearish market. We are going down and then we see expansion. Then when the market retraces back into the previous candle, look at this candle, guys. This is very, very important. The expansion candle followed by this pattern signal continuation of the momentum, especially if the previous higher time frame candle is bearish. Remember what I say, close below. When we close below previous candle, we mean we are going down. So assuming this may be either the close of the previous candle, then this is the opening of the new candle, we just create this pattern. My guys, this is an A plus. Go and ask any other. Go into your chart and you can look at this. Look at the previous daily candle close. Go to your H4 and if you can see this pattern forming on the H4, that is your A plus entry there. You can bet me, guys, you can make the highest probability trade entries. This is the pattern. This is number one pattern. Do I have to show you all? Yes, this is my promise. I want to show you all of them, guys. So you see, I said that what? Expansion candle followed by this pattern signal what? Continuation in the direction of what? Of the previous higher time frame candle. This is continuation, guys. Let's dive in and see what is going on, guys. Okay, you can see a very typical example. We close below previous candle. We can see this is an example of what I just explained, guys. We close below previous candle, and then the new candle open. We have what? The expansion candle. This is what will happen, guys. See the momentum that is coming after this. This is an A plus. Remember, I said this is an A plus. Go into your chart. If you can only trade this candle, just wait for previous day candle. We close above previous day high, and then this pattern form. Just put in your money, guys. You will make the highest money in this market, guys. I promise you, this is not just me going to the chart and picking chart in hindsight. This is what I've been trading. This is what I've been trading, guys. You can witness from my group, from my Telegram group, the highest probability signals I've been sending in the group with consecutive, we call it consecutive win ratios with a high probability consecutive wins. We don't normally call it more consecutive losses. This is just millions of loss of consecutive winnings. We just million of winnings. So this is what we're using, guys. This is telling us that there is trend, there is momentum in the market, guys. Okay, let's get in. Let's get to the other one. You can see that, okay, this is what? This is a weekly candle. The previous weekly candle was what? Was a rejection. Remember, we say when we wick below previous candle and close what? Above it, mean a buying. We are buying. We are going in the direction of this trend. And look at what happened. The market opened and create what? This specific pattern. See the momentum, guys. What I want you to see is just seeing how easy this thing is. Just looking at how the previous higher time frame candle close. Just wait for this pattern, the morning star pattern. We can see how these things are giving you the star pattern. This is what you're looking for, guys. Another one is coming again. We close below previous candle. You see this daily time frame, man. This is daily time frame. We close below this candle. This one open and form what? The pattern here, guys. And then what? The market just drop like no any other business. So you can see we are closing. We reject above, and then we also reject and close back into the range. We are looking for what? Rejection. We close back into the range. Waiting for that pattern is going to give you a high win rate. You can see the star pattern. I'm just wanting you to just observe the momentum that are coming after this pattern. Guys, this is no any other business, guys. Another one coming in again. I'm just want to just be clicking so that you can see for your eyes. You can see a lot of them, guys. Now we have the piece in line pattern. The piece in line pattern, you see, you have been taught about the piece in line pattern, but this is what I call the candlestick combo. This is the piece in line pattern that we use in the A1 FX Pro community. This is the piece in line pattern. Opposing engulfing bar, followed by what? Two candles. Okay, opposing engulfing bar engulfed by two candles indicate build up in momentum. We are building momentum. Usually come after a rejection day or an expansion. Remember, we're just trading continuation. And this is the next video is going to be about determining what will be the next day candle. That is the daily bias. When you have the daily bias, you apply this thing to it. Oh my guys, you have already have what we call an ATM machine in your hand. You just turn your phone to an ATM machine. The next video will be about what? Daily bias. So when you have the daily bias, go back and watch this video, and then there you have a complete model. See what we're saying there? Opposing engulfing bar engulfed by what? Two bars. We want to see an engulfing bar. An expansion candle has been engulfed by two candles indicate build up in momentum. usually comes after what? Rejection day or an expansion day, just like the one I just explained above. So let's see example. Okay, we can see that we have an expansion candle. Then we engulf it by to see the what you want to see is just see the momentum, just the momentum after it, guys. It's just like an easy trade with the lowest drawdown you can ever look for. Another example, guys. We have this is the engulfing candle that what just took out liquidity. Then we have 1, 2 candles. You just put your entry at just at the opening of this candle. You can see how the market is just going down. Look at it again. An expansion candle. Another one here, guys. Just as easy as it. This is just the start. This one is what? The piercing line. The piercing line is just we rebalance an inefficiency. We can see we run a high and rebalance an inefficiency and see what happened. And the pattern just from there. Wait for the market to tap on this level. This is your order block. These guys are teaching you order block. This is your order blocks, guys. Look at how what is going on. This is your order block, guys. So let's get in again. Whether we can have more examples again and again, guys. We read previous day high. This is a H4 candle. This is a H4 chart. We read what previous day high and look at what happened. After this candle form, we engulf what? An expansion candle with what? 2 candles. Look at what happened. You can see that these 2 patterns are forming there. We have the piercing line, and then we have what? We have the retracement into the body of this candle. Remember, I said this is your order block. The retracement back into the body of this candle. It is forming what? The morning star pattern. So we want to see this one happening. This one happened for when you're looking for reversal. So when we were sweeping above previous day high, and then you see this one, this is a reversal pattern. So, but the previous one that I just showed you is what? Is a continuation pattern. So this is the continuation. Now, the next one is the engulfing pattern. I think this one should be the last one I'm going to teach you guys on this video of today. The remaining we'll teach you in other videos, but get the daily buyers and just have these 2 are enough. The engulfing, the piercing line, and then the star. These 3, if you get this one, you have what you want. You just stick to this one. You start withdrawing money into your bank. Bullish signal. Immediate rejection signaling current bullish sentiment is intact. Normally after a higher time frame rejection is. Remember, always here, you see, always look at the last line when I'm saying. It normally happens after what? After higher time frame rejection or an expansion candle. This is very important. When you see this pattern forming, after when we have, assuming this is, we have, sorry, I picked the wrong. Assuming we have previous day candle close, close as a bullish candle, and then you have this one, the new day open, and then you have this one on the H4 time frame. Place your order here. This is your order block, guys. Place your order here. Go and sleep and rest for the rest of the day. You come and then take your profit to your home. The market is going to hit your TP. Just you're going to hit your TP, guys. Let's get in, guys. This is the bullish example. You can see the market closed what? Above, and you can see we engulf. Look at the engulfing, guys. It's also coming from what? From a fair value gap. This is very powerful. It's coming from what? From a fair value gap, from another what? Another order block. So this is a combo. You can see the expansion away. Place your what? Your limit order. Go and sleep. You have a model that can give you money. Let's get in again. Let's get another example. And this is another example. We are collecting liquidity from a previous candle low, rejecting from another block, and engulfing. This is easy. Remember, previous day candle we must close a bullish candle or must close as what? And a rejection candle. So this is the bearish example. Bearish signal, immediate rejection signaling what? This is just immediate rejection. So what do we want to see? When we are selling, when the previous day candle is bearish, it's an expansion candle bearish, and we want to see market going down, we need to see immediate rejection. This is what we're looking for. This is an example of it. We are going, we close below, and then this kind of form, just put in your money, guys. You can see a lot of examples, guys. This is just, I don't want to be repeating myself. You can see them. They are happening day in, day in. Consolidation to engulfing. This is also a consolidation to engulfing. So, but I will teach you this one on the next video, how you can apply this one. This is my own way of trading the market. And expansion candle followed by what? This is all this similar situation with this one. We have a fake out, followed by what? Engulfing. All what you need to see, the previous day candle close what? Close as a bearish candlestick. When you have this engulfing, look at the momentum. What I want you to see, when I'm showing you an example, is just the momentum, the movement. There is instant rejection away from the level. Guys, this is how we trade the market, guys. This is how we trade the market. So the hanging man is the next video. I don't know whether I'm going to teach you this one, but what I want you guys to understand is the next video is going to be about determining the daily bias using the smart money concept, ICT, purely ICT, the inner cycle. This is how I have come up. You see, since last year, we spend majority of our trading based on identifying the daily bias, and then we come up with the highest probability daily bias when you can confidently, even after the daily can close, you can just put in, risk your money, they go and sleep, and for the rest of the day, you come up and get your money in the bank. You don't even need to go into lower time frame finding market structure. You don't need to do that one because of the highest probability, is more than 90-something% win rate. This is just what I'm going to teach you guys on our next video. Stay tuned. If you have any question, the comment section is open, guys. If you want us to record a video, also a teaching on another topic that is find it very difficult, we are always there for you. You are our guys, please. But until then, when you find this video insightful, please subscribe to our channel and then hit the like button. Until then, stay tuned. Goodbye.